soon. Sandip Agarwal is fund manager at Sowilo Investment Managers. Sandip, good morning. Good to have you with us here. Big sell-off last night in IT services companies. Overdone or not?
Hi, good morning, Prashant, and thanks for having me on the show. So I think, as far as the sell-off which has happened, X of Indian IT services, in my view, you will see consistently, the multiples for all those players will continue to come down, and there'll be a slow, what will happen is while earnings will not see immediate impact, but the multiples will keep on getting de-rated. And this is our view for last, more than a year. We continue to believe that, it is super hot. So we don't believe that they can sustain this kind of valuation and multiples. Although in case of Indian IT, we have slightly different view. We don't see that there'll be a sharp impact on the actual fundamental numbers immediately because we have most of the contracts which are long run 5-6 years. So
right, Sandip, let me just, you started the thesis that P multiples will keep compressing is for that view is for IT services companies across Indian and otherwise.
Yes, absolutely.
Okay.
That is what my view is.
Okay, because you start by saying, well, X of IT services. Okay, but the actual impact may not be that large. Fundamentally, that impact, at least in the foreseeable future, in terms of earnings, etc.
So that is what I meant by ex-Indian IT services. So in ex-Indian IT services, the fundamental impact will also be quicker and sharp, and the multiples will also compress. But for Indian IT services, I don't see fundamentals will come down sharply quickly because we have long-run 6-7 year contracts. So every year you will have only 2-3% negative impact. So you have to go and find that new business. So, but yes, we are in a space where, low growth for a long time for large cap Indian IT companies is definitely going to be there.
Sandip, just getting back to basics. Now, agentic AI is not new. So can you simply explain that what was it that Anthropic's Claude, the agent, what were the developments, the updates, which actually spooked the street this time to this extent?
So, I'm surprised, honestly, by the move because, this technology is not something new. It was always there. It has just been repackaged and launched. So to that extent, now it is people are now seeing it as a threat while it was always there. It has been now given in a more user-friendly way, and that is the reason people are spooked. Also remember that, the first impacts will be where there is a lot of data to refer to, so legal services and similar other services. So I don't know, whether that should seriously spook so much for the Indian IT services also, because we will have second line impact and not first line impact. So as I said earlier, also we are running 6-7 year contracts, most of the cases. So you will have limited impact every year, but yes, we will be, low growth for a long time. That definitely is there. So maybe, multiples will derate over a period of time. But I don't see, this something new. This is just one day when it has happened. Let me put it this way. It was there for quite some time now.
Yeah. Got that. Sandip, so what's the thing to do then now? I mean, I'll tell you, many sophisticated investors were of the view that maybe IT services sector is the sector of the year, dark horse, whatever you want to call it, because it's been ignored and shunned and etc., etc. But you think it'll play out that way? And from an actionable standpoint, what should one do to protect and to make money?
So Prashant, I will tell you what will happen in the sector now, where the stocks will be very tough to give a call. But let me tell you this, that, there are two fundamental changes which has happened. People are comparing this IT disruption also with any other past IT disruption, which is grossly wrong in my opinion, because, this is the first disruption where efforts are going down by 20-25%. So definitely it is not like past disruption. You have to find that, compensate that 20-25% effort in future. Second, on the positive side, this disruption will be over a period of 5 years because our contracts are for 5 years. So whenever they get renewed, you reprice it. The efforts get reevaluated. So not sharp impact immediately, but long 4-5 years, we are 5-6% growth industry. Now, what multiple you want to assign for that industry, X of rupee benefit, is something which investors and the fund managers and the people who are managing the assets will have to decide. We are very clearly of the view that, the small caps will do better than mid cap and mid cap will do better than large cap. Having said so, we still don't believe that, any of these segments have a good peg ratio to invest right now. We have been very, very negative for last more than 12 months on the space. We continue to be so. I believe that, after 12 to 18 months, probably both, some correction in the price and some correction in the multiple will happen. And because of that, you may find some good opportunities in some of the spaces. But as of now, I don't see the sharp fall in fundamentals, but I do see that low growth for long term is what will happen.
What about ER&D companies, Sandip? You were excited with their growth prospects, but KPIT numbers were not anything very exciting. What's the current view now on ER&D companies?
So, ER&D, I continue to believe that will do better than IT services. But as I have said earlier also that, they are obnoxiously priced. So even after the correction which these companies have gone through, I think they are very, very super priced, very, very overvalued. I would buy, even ER&D companies that maybe 15, 18 times forward earnings so that, I can make some money on that. I will not invest in any of the ER&D companies at the current level. So our view is very clear. The large names, 11, 12 times forward earnings and mid cap at 15, 18 times forward earnings is something which gives us some comfort to make money. Otherwise, we will wait for our turn for the right prices to be there.
Quick word, Fractal Analytics IPO opens next week. They're looking at a market capitalization of about 15,000 crore rupees. Now, this was a data analytics company, and just going by Anthropic's Claude developments overnight, that's the segment which stands to get disrupted. What is your view on Fractal?
So I won't comment on a specific company, but let me put it this way. There is very, very fast developments which are happening in the space, in the AI side and the analytics side. So, you can be a big beneficiary, so it can play out either way. So we generally will, we have a philosophy. We generally don't invest in loss-making companies and companies which are yet to turn profitable. So for us, it is not an investment space. And we will definitely watch it for next 4-6 quarters. If we get reasonable, better, it is fairly valued, we probably may be interested, but not at this level.
Okay, all right. Sandip, thank you very much for that. Good speaking with you. Appreciate your time here on CNBC TV 18. Well, I think that's a very useful conversation and framework to sort of listen to and have as you approach markets in this particular space right now. 9-10 calls.